Right now, Scienture Holdings, ticker SCNX, is trading at 85 cents. That is a massive, explosive surge of 14 cents, or 19.29% on the day. And for anyone, and I mean anyone, watching this on their Robinhood app or their SoFi Invest account, this is the exact kind of move that gets the heart pumping. This is the quintessential penny stock dream. A sub-dollar stock, left for dead, suddenly catches a 20% bid, and the immediate, overwhelming expectation is that this is it. This is the bottom. This is the lottery ticket that's about to pay off. The news must be revolutionary. But the reality is, this 19.29% surge isn't the story. The real story is the 85-cent price tag. This surge is a desperate, violent reaction to a single piece of good news in a long, painful fight for survival. This isn't a healthy company starting a new uptrend. This is a company on life support whose heart just started beating again, and the market is now in a panicked frenzy, trying to figure out if it's a real recovery or a final reflexive spasm. The common belief, the one that has trapped so many investors in stocks like this, is that all it takes is one piece of good news. The story for Scienture has been building for months, centered on a single product. The company has been telling the market it has a real FDA-approved product called Arbli, which is the first and only ready-to-use liquid oral suspension of losartan, a massive market for blood pressure medication. The bull thesis, the one whispered on investing sites and forums, was simple. If they can get this product to market, and more importantly, get insurance companies to pay for it, this tiny sub-$1 company could capture a meaningful slice of a $256 million market. The expectation was that if that "if" ever became a "when," the stock would explode. Well, today, that "when" finally arrived. The company announced this morning that Arbli has been added to the formularies of major national payers, expanding access to over 100 million covered lives. This is the catalyst. This is the news everyone was waiting for. But that expectation is now slamming headfirst into the brutal reality of this company's financial condition. That's what this 85-cent price, even after a 20% pop, truly represents. This is why institutional money, the kind managed at Fidelity Wealth Management or traded on Interactive Brokers, has been avoiding this name like the plague. Let's look at the facts. Today's news is legitimately good. It is a massive commercial milestone, but it's a milestone for a company with a market cap of less than $30 million and, according to recent data, trailing 12-month revenue of just over $130,000. That's not a typo. $130,000. This is a company that up until this point has been almost pre-revenue, all while burning through cash. The market knows that access to 100 million lives is not the same as sales to 100 million lives. The hard part, the actual selling, starts now, and it has to be done by a company that is fighting for its life. This is the tension that defines this stock. Today's 19.29% move is a war between the promise of Arbli and the peril of the balance sheet. Just a few weeks ago, Scienture received a delisting warning from Nasdaq, a formal notice of non-compliance because its stock has been trading under $1 for too long. This is a critical red flag warning for any self-investing individual. A delisting would be catastrophic, moving the stock to the over-the-counter pink sheets, where liquidity vanishes and most large Fidelity brokerage accounts won't even let you trade it. So, while the bulls are celebrating the Arbli news, the company is simultaneously in a race against the clock to get its stock price to stay above $1. And how is it trying to survive? By raising cash. The company has an at-the-market equity agreement, which it just increased. This allows them to sell new shares, millions of them, directly into the open market at any time. Think about that. As new, excited buyers are piling in today on their Robinhood stock trading accounts, the company itself is likely on the other side, selling them newly created shares just to raise the cash it needs to keep its lights on. This is called dilution, and it's the mortal enemy of the penny stock investor. Let's be perfectly clear about what Scienture Holdings actually is. This is not a diversified pharmaceutical giant. It is, for all intents and purposes, a one-product story. It's a holding company, but its entire value, its entire future, is tied to the successful commercialization of Arbli. The product itself is smart. Losartan is a massively prescribed drug. Many patients, especially the elderly and children, cannot swallow pills. Before Arbli, they had to rely on pharmacists individually compounding a liquid version, which can be inconsistent, expensive, and have a short shelf life. Scienture's Arbli is an FDA-approved, peppermint-flavored, shelf-stable, ready-to-use solution. It's a genuinely good idea. It solves a real-world problem in a $256 million market. This is why the stock can have a day like today. It's not a complete fantasy, it's not like they're chasing a non-existent market, and it's not a Me Too product. It has a real, patented, FDA-approved edge. This isn't a speculative biotech hoping for a phase 1 trial to go well. This is a commercial company. But a commercial company needs a massive sales force, marketing budgets, and distribution logistics, and that all costs a staggering amount of cash, which, as we've established, Scienture does not have. Its recent filings show razor-thin gross profit margins, meaning even if it does sell Arbli, it's not clear how profitable those sales will be. This is why today's 19.29% pop is so fascinating. It's not a steady climb like you'd see in Apple stock or a broad market Fidelity ETF. This is a low-float, illiquid frenzy. The float, or the number of shares available to trade, is tiny. This means a small amount of buying pressure, like we're seeing today, can send the stock flying. But it also means it can come crashing down just as fast. The professional traders aren't here. This is a retail-driven show. You won't find this name in a Schwab Intelligent Portfolios account. This is a pure, high-risk bet on a turnaround. It's a bet that the Arbli revenue will ramp up so fast that it will make the company profitable before the delisting notice comes due and before the company dilutes its shareholders into oblivion. That is the one and only investment thesis. So, what is the path forward? There are only two, and they are polar opposites. The bull case, the one that everyone buying at 85 cents today is praying for, is that this news is the inflection point. The formulary access unlocks a flood of prescriptions. The revenue starts pouring in this quarter. The company reports a massive revenue beat in its next earnings call. The stock price flies past $1, $2, and $3. The Nasdaq delisting problem solves itself. The company raises cash by selling shares at $5, not 85 cents, making the dilution far less painful. They use that cash to expand the sales force, and Arbli becomes a massive success, capturing 10 to 20% of that $256 million market. In this scenario, everyone who bought today is a genius. This is the Tesla stock story on a micro-cap scale. The bear case, which is the high-probability reality, is that this is a sell the news event. The 19% pop is the last gasp of excitement. The reality of commercial execution sets in. The market realizes that getting on a formulary is just the first step. Doctors still have to be convinced to change their prescribing habits. The sales ramp is slow. The revenue comes in as a trickle, not a flood. Meanwhile, the company's cash burn continues. The delisting clock keeps ticking. To survive, they are forced to aggressively sell shares through their equity agreement at 90, then 80, then 70. putting a constant heavy ceiling of supply on the stock. The 19.29 gain evaporates over the next 2 weeks. The stock is eventually delisted or, more likely, is forced to do a reverse stock split, a cosmetic move that staples 10 or 20 shares together to make one new, higher-priced share, which is the kiss of death for shareholder value. This is the future where the great product, Arbli, is killed by the failing business, SCNX. This is a true binary event. There is no middle ground, no slow and steady path for a stock like this. Comment below. Do you think today's 19% surge is the start of a real turnaround for Scienture? Or is it just a speculative low-float pop that will be gone by next week? I want to know what you think. As Scienture Holdings sits here at 85 cents, up 19.29%, we are watching a perfect snapshot of market tension. The expectation is that a fantastic